Get ready, everyone, because the news cycle is absolutely exploding, and we've got the absolute latest, the most mind-blowing updates hitting your screens right now. The pace of innovation is relentless, and if you're not plugged in, you're missing out. Today, we're diving headfirst into a universe of cutting-edge tech, market shifts, and insights that could redefine your week. We've got a breakdown that's packed with everything you need to stay ahead of the curve. From groundbreaking AI expansions to intriguing market movements, we're covering it all with the energy and detail you've come to expect. Prepare to be informed, prepared to be amazed, and prepared to get the ultimate rundown. Don't blink, because this is ChatGPT Insights, and we're bringing you the future today. Stick around, you won't want to miss a single second of this. Make sure you hit that subscribe button and ring the notification bell so you never miss an update. First up, we're diving deep into the celestial whispers with a look at today's Gemini horoscope. What balanced moves are set to propel you forward, and what cosmic currents should you be navigating? We'll break down the astrological forecast to give you the edge you need for a productive day. Then, we're shifting gears dramatically to the world of business and aviation. We've got a critical look at SpiceJet, exploring the mounting challenges of late salaries, rising dues, and a persistent cash crunch. Is the airline flying dangerously low again, and what does this mean for its future operations? Next, we're tackling the dynamic shifts in the Indian economic landscape. Can Bengaluru maintain its allure as a magnet for global capability centers, GCCs, when other cities like Bhopal and Jaipur are vying for a piece of the pie? We'll explore the competitive pressures and strategic advantages at play. Following that, we're examining the often unpredictable world of investments. When stocks turn ugly, how do bonds present a beautiful alternative, and what are the key indicators to watch for in this volatile market? And finally, we're bringing you a stock radar report on Royal Orchid Hotels, which has hit a fresh record high. Should you be booking profits after a significant rally, or is there more potential upside? We'll analyze the market sentiment and expert opinions. Plus, we explore the timeless strategy of wealth creation. Ignore the noise, focus on solid businesses, and hold on tight. We'll highlight 22 stocks across various sectors that fit this philosophy. Don't go anywhere. Make sure you're subscribed and the bell is on. Gemini horoscope today, 29th August 2025. Balanced moves lead to progress. Navigating daily life often involves understanding the subtle influences that guide our decisions and outcomes. For those who follow astrological insights, understanding the day's planetary alignments can offer a unique perspective on personal progress. The celestial forecast for Gemini on August 29th, 2025, suggests a day where balanced moves are key to unlocking progress. This astrological outlook indicates that Geminis will find themselves in a favorable position to make significant strides, provided they approach their tasks and interactions with a sense of equilibrium. The day's planetary configurations are particularly supportive of strategic planning and execution, encouraging a thoughtful rather than impulsive approach. Key areas highlighted include career development, personal relationships, and financial management, where maintaining a steady hand and a clear mind will yield the best results. For instance, in professional settings, a balanced approach to workload distribution and communication with colleagues can prevent burnout and foster collaborative success. This might involve delegating tasks effectively or ensuring that all voices are heard in team discussions. In personal relationships, finding a middle ground in discussions or compromises will strengthen bonds and prevent misunderstandings. This could manifest as balancing personal needs with those of a partner or family member, ensuring that both parties feel acknowledged and valued. Financially, a balanced approach means avoiding speculative risks while also not being overly conservative, aiming for steady growth through well-researched investments or prudent spending habits. The emphasis on balanced moves suggests that overcommitting to one area at the expense of another could create instability. Therefore, Geminis are advised to spread their energy and focus across different facets of their lives, ensuring that each receives adequate attention. This holistic approach is predicted to pave the way for sustainable progress and a sense of accomplishment. The day encourages methodical steps, consistent effort, and an awareness of the interconnectedness of various life aspects. By embracing this balanced perspective, Geminis can effectively navigate the day's opportunities and challenges, transforming potential obstacles into stepping stones for advancement. User impact. Astrologically inclined individuals often report feeling more centered and prepared for their day after consulting their horoscopes, using the insights to guide their actions and expectations. Stay with us as we decipher the cosmic blueprint for Gemini today. Next, we're diving into the turbulent skies of a major airline facing serious financial headwinds. Late salaries, rising dues, cash crunch. Why is SpiceJet again flying dangerously low? The aviation industry is notoriously volatile, and for carriers like SpiceJet, maintaining operational stability requires constant vigilance against financial pressures. SpiceJet finds itself once again in a precarious financial situation, grappling with a severe cash crunch that has led to a cascade of operational challenges. The airline is reportedly struggling to meet its financial obligations, with reports highlighting instances of delayed salary payments to its employees, increasing outstanding dues to vendors and lessors, and a general scarcity of working capital. This dire financial state raises serious concerns about the airline's ability to sustain its operations and meet its commitments to passengers and stakeholders. The core of the problem appears to be a persistent lack of liquidity, exacerbated by a combination of factors including high operating costs, intense competition within the Indian aviation market, and potentially less than optimal fleet management. Fuel costs, aircraft maintenance, and lease payments constitute significant fixed expenses, and any disruption in revenue streams can quickly lead to a liquidity crisis. The delay in salary payments not only impacts employee morale and productivity, but also raises questions about the airline's adherence to labor laws and its overall corporate governance. Furthermore, mounting dues to aircraft lessors could lead to the repossession of aircraft, directly impacting the airline's capacity and flight schedules. This situation is particularly critical given the airline's history of financial difficulties and its reliance on a low-cost carrier model, which leaves little room for error. Industry analysts are closely watching SpiceJet's moves, as a failure to address these financial woes could have broader implications for the Indian aviation sector, potentially leading to reduced capacity, higher fares, and a less competitive market. The airline's management is under immense pressure to secure fresh funding, renegotiate terms with creditors and lessors, and implement cost-saving measures to ensure its survival. The coming weeks will be crucial in determining whether SpiceJet can navigate these turbulent skies or if it faces a more severe downturn. User impact. Passengers and employees alike are expressing anxiety over the airline's financial stability, fearing disruptions to travel plans and job security. We'll analyze the factors pushing SpiceJet to the brink. Next, we investigate if India's tech hub is losing its shine as other cities aim to attract global business. Can Bengaluru lose sheen as magnet for GCCs when Bhopal, Jaipur seek pie? Bengaluru has long been the undisputed leader in attracting global capability centers, GCCs, in India, but a growing number of Tier 2 cities are now emerging as formidable contenders. Bengaluru's reign as India's premier destination for global capability centers, GCCs, is facing an unprecedented challenge as cities like Bhopal and Jaipur actively vie for a larger share of this lucrative market. For decades, Bengaluru, often dubbed the Silicon Valley of India, has been the go-to hub for multinational corporations seeking to establish their offshore operations, primarily due to its established ecosystem of skilled IT talent, robust infrastructure, and a conducive business environment. However, several factors are contributing to a potential shift in this landscape. Rising operational costs, including real estate prices and increased competition for talent in Bengaluru, are making it less attractive for some companies, especially those looking for cost efficiencies. This has opened the door for Tier 2 cities like Bhopal and Jaipur, which are actively promoting themselves as viable alternatives. These cities are leveraging their lower cost of living, relatively lower operational expenses, and a growing pool of educated graduates from local universities to attract investment. Governments in these emerging hubs are also offering attractive incentives, including tax breaks, streamlined regulatory processes, and infrastructure development support to entice GCCs. While Bengaluru still holds a significant advantage in terms of sheer volume of experienced talent and a mature support ecosystem, the strategic push from these Tier 2 cities cannot be ignored. The ability of Bengaluru to maintain its competitive edge will depend on its capacity to address challenges related to infrastructure strain, traffic congestion, and the continued availability of affordable talent. Meanwhile, cities like Bhopal and Jaipur are working to build out their own technology parks, improve connectivity, and foster a stronger local talent pipeline. The success of these emerging centers could lead to a more distributed growth of the GCC sector across India, diversifying opportunities and potentially reducing the concentration of economic activity in a single metropolitan area. This evolving scenario presents both challenges and opportunities for India's broader economic development strategy, pushing existing hubs to innovate and new hubs to capitalize on their unique advantages. User impact. Industry observers are noting a growing interest from companies in exploring Tier 2 cities for GCC setups, citing cost and talent diversification as key drivers. We'll see if Bengaluru's tech dominance is under threat. Next, we explore how investors are navigating volatile markets, turning to bonds when stocks get ugly. When stocks turned ugly and bonds looked beautiful. In times of market uncertainty and volatility, investors often reassess their portfolio strategies, seeking safer havens and more stable returns. The financial markets have recently presented a stark dichotomy, with equities experiencing significant downturns while fixed-income securities, particularly bonds, have demonstrated remarkable resilience and attractiveness. This shift in market sentiment is driven by a confluence of macroeconomic factors, including rising inflation concerns, geopolitical instability, and the specter of a potential economic slowdown. As stock markets become increasingly volatile, characterized by sharp price swings and heightened investor anxiety, the predictable income streams and capital preservation offered by bonds become exceptionally appealing. Bonds, representing loans made by investors to governments or corporations, typically offer a fixed rate of interest, coupon, paid periodically, and the return of the principal amount upon maturity. This predictable cash flow and the lower volatility compared to equities make them a cornerstone of conservative investment strategies. When stocks turn ugly, meaning their prices decline sharply and unpredictably, investors tend to reallocate capital towards assets perceived as safer. Bonds, especially government bonds from stable economies, are often viewed as such safe havens. Their prices generally move inversely to interest rates, and while they are not immune to market fluctuations, their risk profile is typically lower than that of equities. The beautiful aspect of bonds in this scenario refers not only to their safety, but also to the potential for capital appreciation. As interest rates rise, newly issued bonds offer higher yields, making existing bonds with lower coupon rates less attractive, causing their prices to fall. Conversely, if interest rates are expected to fall, existing bonds with higher coupon rates become more valuable, and their prices rise. In a climate where economic growth is slowing, central banks might lower interest rates to stimulate the economy, which would benefit bond prices. Furthermore, the income generated from bond coupons can provide a stable source of return even when equity markets are in decline, offering a crucial buffer for investment portfolios. This strategic shift towards bonds is a classic response to market turbulence, reflecting a fundamental investor preference for security and stability when uncertainty prevails. It highlights the importance of diversification within an investment portfolio, ensuring that different asset classes can perform differently under various market conditions, thereby mitigating overall risk. User impact. Investors are increasingly seeking diversification strategies, with a noticeable trend towards increasing allocations in fixed-income assets amidst equity market volatility. We'll explore the strategies investors are using to navigate these choppy waters. Next, we're looking at a hotel stock that's hitting new highs. Should you cash in or hold on? Mini Hook, Stock Radar, Royal Orchid Hotels stock hits fresh record high in August. Time to book profits from nearly 20% rally in a week. Quick context. The hospitality sector has seen significant recovery post-pandemic, and individual stock performance often reflects broader industry trends and company-specific strategies. Main details. Royal Orchid Hotels has captured market attention by reaching a new record high in August, marking an impressive rally of nearly 20% within a single week. This significant upward movement in the stock price suggests strong investor confidence in the company's performance and future prospects. The hospitality sector, in general, has been experiencing a resurgence, driven by increased travel demand, a return to normalcy in business and leisure activities, and potentially effective cost management by hotel chains. For Royal Orchid Hotels, this surge could be attributed to a combination of factors. These might include robust quarterly earnings reports that exceeded expectations, strategic expansion plans, successful new property launches, or favorable industry-wide trends, such as a boom in domestic tourism. The 20% rally in just 1 week indicates substantial buying interest, possibly fueled by positive analyst ratings, upgrades, or anticipation of further good news. However, such rapid price appreciation also raises the question for investors. Is it time to book profits? The decision to sell or hold depends on various factors, including the investor's original entry point, risk tolerance, and long-term investment horizon. Technical analysis might suggest that the stock is trading at elevated levels, potentially indicating overbought conditions, which could precede a short-term correction. Conversely, fundamental analysis might reveal that the company's underlying business performance and growth outlook justify the current valuation and suggest further upside potential. Industry experts often advise investors to consider the broader economic environment, competitive landscape, and the company's ability to sustain its growth trajectory. For Royal Orchid Hotels, understanding how it plans to capitalize on the current positive momentum, manage operational costs, and navigate any potential headwinds will be crucial. The stock's performance serves as a case study in how specific companies within a recovering sector can significantly outperform, prompting investors to carefully weigh the opportunities for profit-taking against the potential for continued growth. User impact. Investors are actively discussing whether the recent surge in Royal Orchid Hotels stock presents a prime opportunity to realize gains, or if the momentum suggests further appreciation. Transition. We'll analyze if this rally is sustainable or if it's time to take profits. Finally, we wrap up with a timeless strategy for building wealth by focusing on solid businesses, ignoring the noise, and holding on for the long haul.